anything can happen in markets. I mean, anything can happen in markets, and that's why I say don't ever borrow money against securities.
Hey folks, welcome back to our channel. So glad to see you here. It's always a pleasure to have people like you visit our channel. Today we are discussing 10 things you should know before investing in the stock market. In this video, we will explain how to invest in the stock market. Stay tuned to know these facts, for which is quite improbable. Don't worry about it. We are here for you. Without wasting your time, let's get started. Number 10. Never jump blindly into stock markets. Numerous times it happens that, whereas talking to your companions and colleagues, the discourse heads towards the stock advertisement. Conjointly, how the stock advertisement makes a different financial specialists make huge cash. You might never have contributed to the advertisement, but after hearing about all those things, you choose to purchase a few stocks. In any case, on the off chance that you are entered the showcase just to remain within the standard design, you have got landed in for that off-base reason. You should invest within the stock advertisement after getting the fundamental information about it and in agreement together with your monetary objectives. Number 9. Stock market is not a money-making machine. You must have listened to the story of numerous speculators who made their fortune through the showcase. Numerous people accept that the stock advertisement is like a money-making machine, which can turn them into tycoons over some time. Well, it is genuine that a group of financial specialists has made benefits through the stock showcase, but it was as it were conceivable since their great showcase information made a few truly savvy choices by embracing carefully thought of methodologies, and are moreover much taught in the approach. Numerous individuals disregard that a part of individuals have misplaced their whole riches, whereas a few have been constrained to offer their resources to cover the misfortune within the showcase. Number 8. Educate yourself. Handle basics first. Sometimes recently making you are, to begin with, a venture takes the time to memorize the nuts and bolts of the stock showcase and the person's securities composing the showcase. There's an ancient maxim. It isn't a stock advertisement, but an advertisement of stocks. Your center will be upon personal securities which you're contributing in and the relationship with the broader economy and the variables that drive your stock. A few imperative regions which you ought to be commonplace with sometime recently entering the showcases are understanding money-related measurements and definitions such as PE, EPS, ROE, advertised cap, and so on. Prevalent strategies of stock choice and timing, such as crucial and specialized analysis, exchanging essentials, rules, compliances, and phrasing as showcase arrange sorts counting advertisement orders, constraint arrange, hold advertisement orders, hold constraint orders, trailing hold misfortune orders, and other sorts of commonly utilized financial specialists, edge cash required in case you need to exchange in F&O. Pick up a few understanding, almost advertise and its relationship. Number 7. Invest only your surplus funds. The greatest botch newbie financial specialists make is to contribute cash that they can't bear to lose. Contributing within the stock market is risky, which implies that you simply can't lose everything. Like all ventures, there are inherent risks related to the stock showcase. A few other dangers related to the overall advertising, such as a systematic risk that you just can't maintain a strategic distance from by differentiating your portfolio, whereas a few dangers that are stock-specific simply can maintain a strategic distance from. You would like to choose your claim hazard resistance considering your age, monetary strength, retirement objective, etc. and appropriately ought to take the chance. On the off chance that you need to require hazard within the stock advertisement, at that point as it contributes to your excess reserves, which you'll bear to lose, the venture is done to create more cash, but don't contribute all your crisis reserves within the stock showcase. Number 6. Avoid leverage. Use essentially implies utilizing borrowed cash to execute your stock advertisement procedure. In an edge account, banks and brokerage firms can loan you cash to purchase stocks. It sounds incredible when the stock showcase is moving up, but consider the other side when the stock showcase or your stock goes down. In that case, your misfortune would not as it were dissolved your beginning venture, but you moreover have to be paid intrigued by the broker. Uses in this way a device not one or the other great nor awful. In any case, it's the best utilized after you pick up encounters and certainty about your decision-making capabilities, hence constrain your hazard after you are beginning to guarantee you'll benefit over the long term. Number 5. Avoid mentally. Not at all like numerous financial specialists do. You ought to maintain a strategic distance from the crowd attitude that's affected by the activities of your colleagues, neighbors, or relatives without assessing the current data and basic stocks. In this way, on the off chance that everyone around is contributing to a specific stock, the inclination for potential financial specialists is to do the same. But this methodology is bound to reverse discharge within the long run on the off chance that you have not chosen the stock by cautious investigation. So in case you truly don't get it approximately the stock, never step in. Recently contributing to a company, you ought to know almost all its commerce. It's critical as it will contribute in businesses that are simple for you to get it, particularly whereas you're fair beginning out. Never contribute to a stock, contribute to a commerce instead. Number 4. Diversify but refrain from over-diversification. Never put all your cash in one stock. Make a well-diversified portfolio of stocks that can assist you to decrease the hazard and spare you from losing cash in many stocks don't perform well. To maintain a strategic distance from over-broadening, as increment within the number of stocks up to a certain constraints do help in expanding the hazard proportionately. But past a certain number of stocks, your venture can get the correct development minute. Number 3. Don't try to time the market. Follow a disciplined investment approach. A larger part of the speculators' attempts to time the advertising, something that the budgetary organizers have continuously been cautioning them to maintain a strategic distance from, and hence lose their hard-earned cash within the handle. No one can effectively and reliably time the showcase by catching the tops and bottoms over numerous commerce or stock market cycles. You'll be able to contribute over a period of little sums of money to normal the showcase and get the advantage within the long term. Speculators who put in cash in the right offers methodically over the long term create exceptional returns. Subsequently, it is judicious to have tolerance and take after a restrained venture approach rather than keeping a long-term wide picture in intellect. Number 2. Don't let emotions impact your investment. Partition your feelings from any specific stock, as numerous speculators conclude losing cash within the stock markets due to their failure to control feelings. Get rid of the fear and covetousness cycle. Don't contribute to any theoretical obscure stock tricked by its past marvelous return without understanding the hazard included that will lead you to endure misfortune. In a bare advertisement, control your fear and don't freeze and offer offers at rock bottom costs. In this way, fear and eagerness are the most noticeable awful feelings to feel when contributing, and it is superior not to be guided by them. Number 1. Realistic expectations. Trusting for the best from your speculations isn't wrong, but you'll be heading for the inconvenience on the off chance that your budgetary objectives are based on unlikely presumptions. For occurrence, parcels of stocks have produced more than 100% returns amid the awesome bull run of recent a long term. Be that as it may, it isn't cruel. Merely should continuously anticipate the same kind of return from the stock markets. If you're feeling that stocks in your portfolio are exaggerated, it is way better to switch to a moderately more esteemed great stock. To any news or money-related occasion related to a specific stock or industry impacts its stock. Every investment is intrinsically linked to risk. Its existence and diversity in various investments are some of the driving forces for capital market development. Risks have also led to the emergence and development of 4,444 alternative investments. The prosperity of this part of the market has also been affected by the cyclical financial crisis, which has always been the driving force for seeking investment portfolios. Even during periods of failing market prices, it will also provide profit opportunities. Investments are effective tools to diversify risk, but they are not suitable for all investors. Attempts to assess and forecast the alternative investment market have been cautious, not only because of the investment itself, but also because of the different characteristics of the market in which these investments are made. There is no doubt that lack of access to key statistics greatly hampers reasoning. So that's all for this video. We hope that this video was informative. If you liked this video, please click on the thumbs up. And to enjoy more such videos, please subscribe to our channel. See you all in the next video.